morning, 6:16. Yesterday, Brent, I was telling you about our escapade in Salt Lake City.
Yes.
Over our Christmas break. My son had to have an emergency appendectomy. Well, apparently there's more activity going on in Salt Lake City. A Tesla ran a red light, smashed into a car, and injured 3 people. So
really not funny, but
yeah, I mean, there's lots of action in this little town of Salt Lake City, right?
Who knew?
Who knew, right? So, I know which hospital they're at.
Well, you know how to pick them, don't you?
Yeah, I do. It's interesting too. There's if you take a look at the automakers, right? Tesla's market cap is substantially larger than all of the other major automakers' market cap combined, right? So the market cap is the price of their stock versus the number of shares outstanding, and that's how you get to kind of their valuation in the market. And of course, you've got GM that produces millions of cars versus hundreds of thousands of cars, and it kind of doesn't make a lot of sense. But Tesla's got a lot of problems here. I think that is coming up. There's been a lot of these crashes just lately. Tesla over the holidays ran into the back of a parked fire truck. It's kind of like that old joke about why do you sit at the back of the airplane?
Yeah,
because you're the last one to the scene of the crash.
No kidding.
So always get the last seat.
Yeah.
Right.
Yeah. And it's excellent service from the stewardess back there too.
Yeah, absolutely.
I'm sorry, flight attendant.
Yes, yeah. Be careful with your wording.
Ruh-roh.
So, you're forgiven. You're an okay boomer.
Yeah, I'm an okay boomer.
As you get older, nobody cares anymore. Yeah. He's just old.
I can't wait until I turn 75.
I know, so you can just say whatever you want.
I don't have to pretend to have a filter.
I know, right? The millennial generation is changing things within the economy. Cereal is no longer a breakfast item. They're moving away from cereal, and it's just a difference. When we were growing up, it was the high sweet corn syrup, Captain Crunch,
Sugar
Fruit
Pops.
Loops. Yeah, Sugar Pops,
Cocoa Krispies.
That was breakfast, right? So that's no longer breakfast anymore. So they're starting to move away from cereal. Cereal starting to actually struggle in the industry. Well, not only have they killed cereal, they've now killed the country's largest milk producer.
Yeah.
Yeah. Borden Milk is actually filed for bankruptcy. Nobody drinks chocolate milk anymore.
I guess.
Mean, did you have a milkman growing up? This is how old we are, right?
No,
I actually had.
We didn't.
You didn't. Okay, so where I grew up, we actually had milk delivery to the house, right? The guy, the Borden milk truck would actually drive. Yeah, would drive up to the house, and the guy with the cap and the little white outfit would get out and bring milk to your front door and drop it off, and that was the best thing, right? So but I mean, it's great because you get the chocolate milk in the glass bottles,
fresh
glass bottles,
Yeah.
Yeah, you don't get that anymore. So it's a shame. You're really missing, by killing milk, you're really missing something.
Yeah.
Soy milk just doesn't quite pull the trick, right?
My wife is into coconut milk all of a sudden. It's like, babe, that's not the same.
I know, but my wife drinks almond milk.
Yeah.
So it's not the same.
No.
And she gets the chocolate almond milk for the kids, and it is not chocolate milk. Trust me.
I get the almond butter thing, but almond cheese, no.
Yeah, it is not milk. And trust me, you need to save chocolate milk. That's all. So Borden Dairy Company has filed for Chapter 11 bankruptcy on Monday amid rising milk prices and what court filings describe as an unsustainable debt pile. Borden was founded in 1857.
Really?
Yes. I did not know that, by the way. 1857 is one of America's oldest and largest dairy producers. It is the second major dairy company to fold in the last several months. Court filings said the company would use Chapter 11 bankruptcy to pursue financial restructuring designed to reduce its current debt load, maximize value, and position the company for longer-term success. Now, there's actually 2 stories within this story. One, while we joke around about killing off milk, the real story here is about debt. One of the things that we have talked about here on the show a good bit is the tremendous amount of corporate debt that's outstanding. Corporations have been piling up a lot of debt simply because interest rates were low, right? I could borrow cheap to finance stock buybacks and dividends and other non-productive investments. And this this has been a problem. In order to try to create these earnings per share growths that Wall Street is demanding, Yahoo Milk. Yoo-hoo, that's right.
Yoo-hoo Milk.
Yoo-hoo Milk, that was it. But while trying to get, to meet Wall Street expectations of continued earnings growth, et cetera, companies have resorted to really just two avenues of creating growth in earnings per share by reducing the number of shares through share buybacks. This is a non-productive use of capital because it doesn't promote any type of long-term growth of revenue. But more importantly, it's been done primarily a lot with debt, and that debt has to be serviced and paid and met. Those obligations have to come. And we've seen several companies actually filing bankruptcy over the last several years. Toys R Us was one of the other high-profile bankruptcies recently because of the debt, and the debt has to be serviced. And this is one thing to make sure that you think about here, because ultimately, as we go through this cycle, and it seems like nothing can derail anything at this point in terms of economics or markets or anything else, because, well, the Federal Reserve is injecting lots of liquidity, suppressing interest rates, keeping interest rates low. The problem with all this is that ultimately the debt does become an issue, and it has to be serviced. It has to be paid. It's not the government, and and ultimately this is a problem. And when you take a look at the amount of corporate debt outstanding, and particularly looking at a ratio of like debt to actual economic growth, we're at the highest levels ever in history in terms of the amount of corporate debt, just corporate debt, non-financial corporate debt. We're not talking about bank loans and these type of things that are outstanding to consumers. We're simply talking about companies and the amount of money that they've borrowed. That, on a relative basis to the underlying economic growth, is at the highest level on record. Now, why does that matter? Well, the reason it matters is because the stock market is not the economy. The stock market is simply a reflection of overall economic growth. And economic growth is slated to run at about 2% this year in 2019 as we get the fourth quarter estimates in. And when we get to 2020 and start seeing the first, second, third, and fourth quarter of 2020, it's expected to actually slow to below 2% growth in 2020 for the economy. Now, the important part about that is that 2% economic growth, when you think about this, is not great. It's the lowest rate of economic growth in the history of the U.S. We've had this for over a decade. But the important thing about economic growth at 2%, and this used to be called escape velocity. When we used to actually be worried about 2% economic growth, it was often talked about that we need to be above 2% to achieve escape velocity for the economy. Now, what does that mean? That means that the economy is actually growing faster than population growth. So about 2% is about what you get economic growth-wise just from the growth of the population. And this is something that we don't do a lot of analysis on, is when we look at retail sales. We say retail sales were up more than they were last year. Okay, great. No problem. Understand that. But how much of that was driven just by there being more people in the population, right? If everybody is spending the same thing, you just add more people to the pile, you're going to have more growth because of the population. So we need to think about these things in terms of the population growth and how it affects it. But at 2% growth, you're basically just keeping up with the rate of population growth. In order to say we've actually got strong economic growth and that we've achieved something about creating a better economy for the vast majority of Americans, you need to be thinking about economic growth at 3.5%, 4.5%. And we haven't seen that since the late 90s. And this is kind of really the problem, is that because of the amount of debt that we carry on a federal level, record federal debt, I'll spit that out, record federal debt, pushing, we'll be north of $24 trillion in 2020 in terms of the national debt, record corporate debt, record household debt. Debt is a deterrent for basically more productive investment, productive growth. If I've got a lot of debt in my household personally, then most of the money I'm bringing in terms of my income is going just to sustain my cost of living, right? Rent, utilities, food, etc., and servicing my debt. The more debt I pile on, the more of my income is diverted by having to service that debt. It's the same thing for businesses. It's the same thing for the government ultimately. And if we're spending more of our dollars just servicing debt, it doesn't leave us a lot of money to actually invest into the economy to produce growth. And this is one of the big mistakes that is often talked about and we hear this a lot from Democrats. They want to, in the upcoming election, you see a lot of this in Democratic debates, we want to pay for college, we want to give you free health care, we want to give you free this and free that. That's fine. There's nothing wrong with giving people free stuff, except for the fact that you have to pay for it. And how do you pay for it? You pay for it by taxing your taxpayers more. But the revenue that's coming in from taxing the citizens is not going to create stuff that generates a long-term economic growth. And when you have 96 to 98% of all your tax revenue just servicing social welfare, that means that anything else you do in the economy has to be done through debt. And if you're not using those debt issuances to do something productive, the debt just continues to erode on economic growth because you're not doing anything to create better economic prosperity. And that's why we can't get out of this 2% slug of growth, which is really just a function of population growth. Be right back after the break.
The Real Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.